This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora, and welcome to Tuesday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. It's been a toughish night for commodity currencies as markets mark down these prospects. That has been true for both hard and soft commodities, although there is more of a sag than a significant fall. In the US, the Chicago Fed's National Activity Index rose again, although this time it was minor. But the May index was revised higher. That makes it 3 rises in the past 6 months and a sharpest positive change from a year ago. This is actually an important indicator, but one that is usually ignored by markets. In Japan, the next meeting of their central bank is Wednesday, July 31st. It has been widely expected they would raise their policy rate and make other moves towards normalisation, largely because their long-held goal of getting moderate inflation embedded seems to have been achieved. But now they're giving unofficial signals that there may be yet another delay because household consumption is not improving as they want. And Taiwanese export order growth eased in June, rising 3.1% year on year, but that missed expectations of a 12% rise. The miss is largely due to lower orders from Japan. You may recall that May orders rose 7% on this year-on-year basis. Today is Budget Day in India. This one may reflect the pressures on Modi from his coalition support parties, the ones he needed to stay in power. This price may not be cheap, and if it does seem excessive, there could well be financial market reactions. And the People's Bank of China unexpectedly cut key lending rates by 10 basis points to fresh record lows yesterday. The one-year loan prime rate, the benchmark for most corporate and household loans, was cut to 3.35%. Meanwhile, the 5-year rate, a reference for property mortgages, was trimmed to 3.85%. Yesterday's decision came days after the third plenum meetings at the end of last week and follows a slew of data that indicated the Chinese economy continues to lose steam. At the same time, the central bank reduced its collateral requirement for its MTF facility. What we're seeing is a skew to short-term priorities now. And staying in China, they're grappling with not only a fast-aging population, but an out-of-balance retirement age. Chinese men retire at age 60, women at either 55 or 50. By 2035, more than 30% of their population is expected to be at that age. Even though retirement support programs are skinny there, these ages will have a dramatic impact sooner than many realise. But Beijing does realise, and it has moved at the third plenum meeting to raise that age. However, the messaging is subtle because it is widely expected to generate substantial pushback amongst those affected. Demographics is destiny, and China won't have gotten rich like Japan before these trends become very difficult to manage, so their options are closing fast. In the EU, the ECB's survey of professional analysts suggests markets expect them to make only begrudging progress against inflation's targets, but progress nonetheless. It won't be until 2025 that inflation hits 2%, these analysts suggest. They haven't changed their view on economic growth in the region, with a tepid 1.3% real growth in 2025. But they do see better progress battling unemployment, even though these levels will remain relatively high by international standards, 6.4% in 2025. And the CrowdStrike IT disaster is still lingering, especially in the travel industry. It has raised many questions, of course. One is, who will pay? That now largely seems to be the insurers, and that has implications for premiums and coverage in the future. The US Treasury 10-year yield is now at 4.26% and up 2 basis points from this time yesterday. And the price of gold will start today down $6 at $2,393 an ounce. And oil prices are 50 US cents lower at $78 a barrel in the US, while the international Brent price is on $81.50 a barrel. And the Kiwi dollar starts today down more than a quarter cent at 59.8 US cents as commodity currencies take a hit. Against the Aussie, we're still at 90 Australian cents. Against the euro, we're also down a quarter cent at 54.9 euro cents. That all means our trade-weighted index starts today at 68.8 and down 20 basis points from yesterday. And the Bitcoin price starts today at $67,370 and up 1% from yesterday. Volatility over the past 24 hours has been moderate, at just on plus or minus 2%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.